My name's Max. I'm a Forex trader. I also trade some indices and commodities. So I'm just going to give you, with the chart screen of the S&P 500 here, just a bit of background on me and the reason for this video. And I'm going to run you through some trading strategies of my own and some things that I've picked up, and basically how to beat the market makers at their own game, which is essentially the aim of the game. So whether you're a new or experienced trader, there's going to be value in this video. So if you're a new trader and you found this video, I consider yourself very lucky, because I've gone through the hard yards of spending money, losing money, as all seasoned traders do. There's a stat out there, and or statistics out there that basically 90% of traders give up within the first 2 years, and there's only about 3% of traders that make money on the Forex. So I've done the hard yards, gone through that learning curve, and if you are a new trader, then I would say you're lucky to come across this video so early on, because unlike those ads that you see, I'm just a regular guy from Australia, but I've had all the experience. I've had the ups and downs, and now I'm going to impart some of that knowledge onto you. So my trading style is, I'm gonna go over things with the chart and show you some different things. But I just want to give you some background. My trading style, basically, I started off as an Elliott wave trader, and learned from a great guy, one of the best Elliott wave traders going around, from Jim of All Trades. You can check him out on YouTube. So I learnt my Elliott wave. I fell in love with Elliott wave. Really clicked with me over your sort of traditional, standard, or just I guess it is the standard traditional trading, technical analysis. Such as your support and your resistance, and your standard trend lines, and your candlestick patterns, etc. So I really liked Elliott wave. It was more to think of, and I studied that deeply. There's a bit of an evolution that happened. I got into using trend lines on the RSI, which you can see here on the S&P chart here, and that really changed the game for me a couple of years into trading. Because it is actually a leading indicator, unlike a lagging indicator like your MACDs and things like that, and breaking resistance levels for your breakout traders and things like that. And I'm going to talk about how traders like that get taken out and get wrecked. And there's just to quickly jump onto the chart, there's a classic example here on the S&P 500, where your breakout traders would have, once this range broke, taken the long, and almost all of them would have been stopped out when it came back into the range. So things like that. That's a classic market maker footprint. But I'm gonna go through some things like that a bit later on in the video. But yeah, so basically once I moved to the Forex. As I said, I do trade some indices, pretty much just the S&P, and then I trade some commodities like gold, silver, and oil. But once started in crypto. I suppose I should have mentioned that I started in crypto, and it sort of follows the Elliott wave. Elliott wave's a little bit better, whereas the Forex market, if you don't know this, the most manipulated market there is on the planet is. If you try to follow the rules of Elliott wave, you are going to have a bad time. So what you need to do is recognize market maker footprints. That doesn't mean to say that there aren't the facets and styles of Elliott Wades you can use. Of course there are, and of course I do, but you will, if you try to stick to the rules, you'll end up losing your money. So you need to know those market maker footprints and know when to use your Elliott Wade knowledge and when not to. So most retail traders' styles and their downfall is not because their technical analysis doesn't work. Your standard technical analysis does work, but the thing that you're probably missing is how to enter your trade without getting stopped out by market makers. So without, you might find that you did all your TA and everything looked great, and then something happened where it came back and it stopped you out, and then only to continue on to where you expected it to go. This is not only happening to you. This happens to everyone, and this is the market makers. They know how to wreck, retail trader psychology. They know how to take them out of their positions before continuing on to where they go. So basically, what I have the knowledge in is how to overcome that, how to recognize the market maker footprints, and then how to trade with and beat the market makers, which is your goal as a trader. So there's also, I'm going to talk about, if you come across anyone that says technical analysis is rubbish, then run away, they're a goose. And if you come across anyone that says fundamental analysis is rubbish, then run away, they're a goose as well. So I started off as a technical trader, and that's all I did. And you can make money and you can win trades with just technical analysis. However, if you combine it with fundamental analysis on the Forex market, that is certainly the way to go, because you are going to be able to ride the trends and not take the wrong trades or the reversal setups too early, let's say. Another thing critical to Forex markets is session timing. So session timing, you must trade with the sessions. I have learned that if you try to trade just mid-Asia and random times, you're most likely going to find that, and I'll explain later on with what I mean, but you're going to be in what's called an expansion phase or a contraction phase, and you're going to maybe grab an entry for it only to come back, take you out, or put you in a bit of fear, mess with your psychology, and only to go the way that maybe you thought it was going to go. So this is about session timing. I am a London session trader, so being in Australia, London varies for me. It depends on daylight savings. Currently, it is the summer of Australia. We are in daylight savings time, and hence London starts at 7 p.m. In winter, it starts at 5 p.m. So I can often catch most of the London session. Unfortunately, in summer, a lot of the New York news, like as in just before New York opens, happens at about 12:30 a.m. and I often, with my schedule, miss that, which is unfortunate. But during the winter, I catch those news events, which is great for trading. So I do prefer the winter to trade. However, I just adapt my trading style in terms of my types of trades, swings compared to scalps, and I do this depending on what is going on, depending on the session time and my time, my daylight savings time or not. So I don't stay up for trading. I've done that in the past. Losing sleep, I don't think it's good for your mental health. I even your physical health, and I like to be nice and strong and healthy when I wake up, and sleep depravity is not good, so I would recommend against it. You can find all the trades you need in either London or New York. If you are only able to anywhere in the world that you are, you're either going to be able to catch, Asia and London, or London and New York, or New York and Asia. You're always going to be able to catch 2 sessions, and so long as you can do that, I would focus on New York and London. Again, I'm primarily a London trader, and I catch many trades that trend throughout New York, which is good, because then I can catch some pips whilst I'm sleeping and wake up to nice and green, which is great. So I'll go into here a little bit now about my trading strategy. We'll get into the charts. So there's two strategies I use. One is the 3-phase market setup, and then the other is my own RSI strategy. So the 3-phase market setup I did not create, but I mean, who has created anything? Almost, everyone's almost done everything right. But it is the market maker strategy, and that is what you need to know. I'm going to give a brief overview in this, because you're welcome to go and look it up yourself. I believe it's ATS 3-phase market. If you put in something like that in YouTube, you will find the video yourself. I watched one video a couple of years ago. They've got a course, etc. I never did that. I took in the knowledge that they imparted upon me, and I honed the strategy myself to great effectiveness. This, coupled with reading market maker footprints, has allowed me to develop a great trading strategy along with my RSI strategy to have great swing trades, and also just great day trades, scalping trades. But basically, what the 3-phase market setup is what you'll have is a contraction phase, where this is not a very good drawing. I'll try to do a little bit better than that. Where you'll have the market contracting with, I'll just do that again. So the market is contracting, right? So you've got lower highs and higher lows, i.e. a contraction. You'll get the contraction phase, which is basically market makers just resetting the market. All right, they've trended overnight through a session or whatever, and now they're resetting the market to start taking orders. This happens on all time frames. It's visible on all time frames, and basically what you want to do is know which way your market is trending, know your directional bias, and you want to take your trades accordingly. You have the contraction phase, which what you take from that is an expansion line, and then you have your expansion legs, and this is the market expanding, and this is where the market makers take orders. So they get sells here, and they get buys here. They wipe out these sells, get some more, wipe out these buys, get some more. So they're taking all this liquidity, they're taking retail traders out, just taking their money, and then they'll go up something like this, take a top. You can have as many or as few legs. You can have simply 3 legs, and you can start trending, or you can have 7 or 8, 9, 10 legs, and I'll show you this. And then what you have is you start trending down. Now what you're looking for is the retest here of the expansion line to catch your trade. Now, if you know what you're doing, like I do, and you have the experience, you can catch the expansion legs, and I'll show you where I've done that. And then if you want to play it more safely, what you do is you try to catch the retest of the EL, and that way you can put your stop, a little bit above. So, but what you have is the contraction, the expansion, and then the trend. Again, I'm not going to go into it too deeply. That is just the very simple way to explain it. If you need to know more information and you want a helping hand, I do have a Discord I'm starting. That is what I'm doing now. Spent my time learning this and honing these skills. I've been giving it out, giving away many trades, 100 pip, 200 pip, 300 pip trades, for just giving it to people in the Discord for free, just to help people. And now I am going to be starting my own Discord and charging for it because, well, it takes a bit of work and it's a bit of effort, right? So I also don't have maybe the capital that many people have. If I can help you and you have greater capital that you can pay me, then I can build up a capital where I can start making good money myself. So that's just me being honest. I don't have the biggest capital to use to trade. I know a lot of people that I trade with have far greater capital, and it's not even close. So I still do work. I still do work full time. So, but again, I trade a lot, and I give out a lot of trades every single, pretty much every single session, every single London session. I'll have a trade set up. I do swing trades, and I also do your day trades. When it comes to the Forex, my strategy is basically 3 entries. Right, I'm going to just draw this. So 3 entries. Your TPs, you take profit. 20 pips, 50 pips, and 100 pips. Now, there are swing trades, which I'll define as well, and then, we can be on swing trades, we can be looking for, 400, 500, and even up to 1,000 pip swing trades, which I have given, and I can show you. So that's just a bit of a rundown on sort of my trades and the way I trade. What that does is that gives you, when you have 3 entries, it allows you to you take profit on a 20, let's say 20 pips, right? And then the market decides to come back for one reason or another, and you take that 20 pip trade. That allows you to put a stop on one of your other entries at break even, and then the stop on your third entry would be at a 20 pip, let's say 20 pip stop loss, right? And that gives you a break even trade. So you've got 3 positions that are going, and it's a free trade to take it all, up to 100 pips. But it allows you to have as long as you take the good entries and you have good risk management, etc., it allows you to take the good trades and not lose and have a lot of break-even trades. There's only a few outcomes you should have when you're trading, and that's a small loss, a break-even trade, a small win, or a big win, right? You might have heard that before. I learnt that from We Trade Waves, and there's nothing more correct than that. If you're not having any of those 4 outcomes, then you're doing it wrong. And I think we've all done it wrong. If you're a new trader, you might not have, or you may have. But experienced traders, you know that when you've done it wrong and you've taken a big loss because you've let your emotions get in the way, and you've come unstuck. So I'll just check if everything's going swimmingly on the record. Looks like we're all good. So yeah, anyway, let's get into some charts. I've spoken enough. So I just want to show you here on the 12-hour. Basically, this is that 3-phase market setup that I told you about. We had a contraction phase here. It's on the lower time frame. You can't see it on this time frame. But, and I'm not going to go too deeply into stuff like that. If you want that help, I can certainly give it to you in the Discord, which I'll put the link up on. It is a paid Discord, but you do have a free trial, and you're obviously welcome to leave whenever you want. So this is that contraction phase. I've drawn the expansion line, and then what we have is these expanding legs. And this was a news event back in December where we wicked up, and then it was just a huge, massive sell-off. We broke the channel, and then we started consolidating here. So that's that setup, right? I shorted this down. I already caught this short here at 40.91, and held it all through even that manipulated wick, right? But that's what it is. This is what I'm saying, right? It's manipulated. That's what people would say, that's a manipulation, and it is, and this is the point. But the free phase market setup allows you to understand that, and you say, well, how did you know it was going to do that? Well, we retested. So if we were looking at this before, wow, that's a great sell. Oh, we got the retest. We're going to trend down. And then once it breaks back above that EL, that expansion line, we need to be looking for another expansion leg up to take that liquidity, right? Market makers are all about taking liquidity. Okay, it's one of the main trading setups that I take in the Forex market is taking those liquidity grabs with the market makers. You see it all through here. So this was a range here. We started building this range. I'm not sure if looking back, if I had some ELs on the lower time frame. It doesn't really look like it. Yeah, so here I had a smaller one. That's on the very low time frame. If you go down to the 15-minute, as I said, it's on many time frames. And that's just looking for those entries. Now, what I had here going to, this is my RSI strategy. We have 3 points, 1, 2, 3. We had a break, retest, and a break and a retest. And I was calling for this to shoot up to the 39.80 level. And I'll just show you some proof of that. What do we got here? This is just in the Discord. Excuse the time. I'm pretty new at doing videos and such, so I'm just having a look here. What date was that? Jan 6th, eh? 29th. That's why it's not there. Right, here we go. Sorry about that, guys. So, higher time frame, still looking for that leg up to 39.80 level. Got the bump and run going on the 12-hour, and this rounded wiki bottom on support. A decent leg up would have to be my bias. So that's back here. We've got the bump and run on that 12-hour, and then go to the chart, and you see that was that first, and then we had that second leg down, and that's why I went to the smaller time frame, looking for the setup. So there's that expansion line there, and then we obviously got that on that news event, which is a big news. I think it was the FOMC from memory. And again, if we go back, I sort of spoke about that. I'll go into that a bit later, but spoke about that on the on the majors and what it was doing, and was expecting that leg up. Yeah, I guess I showed you a bit there. I don't want to go crazy because this video could just blow out, but you know, here's another example where you have an expansion line here, and we've got this expanding, and then we have this leg up here. This is on DXY. So 104.7. Here's a good example. Let's go back. Tuesday, 3rd of Jan. And I'm just showing you this, guys, just to say that I'm not talking and making things up, right? You got to, a lot of guys want to talk about what they do, but they don't have any proof for it, right? So yeah, I wrote here, if DXY doesn't shoot up from here and stays below the EL at 140, I've got to trade majors long for another leg, right? So I was expecting this with this expansion line and this leg down to shoot up, but I said if it doesn't and it stays below that 104 line, then I'm going to trade majors long. Obviously, it's the inverse. And then we had this here. So broken and tearing, if straight to 104.6, 104.6 to 104.75, I'm looking short, but if it corrects and then goes up, I'm looking for higher targets. So it's about the wave structure, it's about how it gets there, right? And if it shot straight up there, I was looking for the short. So, it's got some guys in here asking me about what's going on and why, and I just said we got some prior big support, flip resistance, confluent with expansion leg, liquidity grab. I was expecting this leg up, as I said in prior posts, but not so sharp. I wasn't expecting it to go up so sharply. It may well keep on going, but it was the trade setup available on majors missing the dump. So with missing that dump, because it was just straight up, and I think it was early in the new year. That was the next trade setup, right? So we shot straight to that 104.7 level, and here's an oil cell that I got right on the wick there. That's an expansion leg that I'll show you. I throw all the trades, and then you see this dump that happened overnight. Again, like I said, I don't trade New York, so I didn't get to catch that. But that dump went almost right down to retest the EL off that 104.7 level. So if you were, as I said, I long some majors on that level on DXY, and that's what you do, right? So this is what you're going to get if you're in the Discord, right? So here I wrote short oil 81,500, looking for this or bigger expansion leg down, but most likely correction for more upside. So I had the idea. This is the thing, you don't always get it right, but had the idea for the correction upside. But I got the short on that wick, which I showed you here, short right at the top there, and we had that lovely sell-off. And then what did oil do? It did not stop at the EL, and it kept going. And then if it doesn't stop and starts moving up, then you can write it down. You might take a hedge, you might cut that hedge, you write it down, and then you take profit under here, because what do we have? We could have another expansion leg, right? Now, as it turns out, oil didn't end up doing that. Oil ended up, just riding it on down. As you can see here, I might go back to that half hour actually. So this was that expansion leg. You see the contraction zone, and then we have that expansion leg, and so I caught that short here, and then I wrote it down to here, and I took profit here because that was the expansion leg, right? And I expected we'd go up and retest and then maybe continue on down, but sometimes it just sells off, right? This is what happens. We don't always get it right, but as long as you have your parameters in place and you trade according to your strategy and your risk management, you're going to be alright. Again, just moving on, oil, you know, here's an expansion leg here, contraction zone, we've got the expansion legs, and then I caught up a couple of longs here. It did mess around a little bit too long for my liking, and I just took a break-even loss, or no, just a break-even trade, because it just wouldn't get going. Sometimes that can happen. I was waiting for, when this wave came down, I was waiting for this, and I was going to go long here for that. Don't always get what you want, and that's fine. The great thing about the Forex market and all these things, commodities, indices, is there's always a trade, so you don't need to chase any trades. So when that didn't come, I just left it, and that was totally fine. If you wanted to catch it here, you could catch it here. I did end up taking the short up here, and that is because we have a corrective wave in the middle here, right? It's called a running flat, and then we have the leg up here. And if you throw, this is a bit of Elliott wave here, if you throw the fibs on that, then you got the 1618, almost a 1618 tag. And there was your short, right? So I got in, and you also, with that, you also had the golden zone. I believe it was roughly in the golden zone of that wave down. Well, no. What did we hit? The 50. Yeah, not even quite the 50. There you go. You don't always get what you want, but considering the wave was extended and we had the three-wave structure, it was a good short. Now, what happened after that is we came down, and then we did not break this EL. So you need to take profit, you need to take your trade and get out of there. Let's check the recording again. All right. So I'm going to show you something on XAU. Just a classic market maker setup. Where are we? Oh dear, the time frame. Yeah, down here. So there's another classic market maker setup, the double top. So here you see the EL. That is not the EL. That's a prior EL expansion line. But you see these expansion legs here, and you know, it couples in with your traditional trading patterns like your double top, right? So double tops, they play out about, you know, I don't know, 3 out of 10 or 30% of the time, 20% of the time. It's just to keep retail traders believing them and using the pattern, right? But they are a classic market maker setup. You can certainly trade them. Obviously, that was a decent move, right? So there's nothing wrong with trading them, but then you've got to know when they're going to be taken out, right? So this move was going to be taken out. This is on the 3rd of Jan. Again, I can show you where I have posted that. Well, maybe it's the 4th. Yeah, here it is. So gold double top getting taken out with news tomorrow, long into shorts. So there's your double top, there's your liquidity above, and there's your deep move there, and then so from 1838. So that was when market was here, right? 1838, and then we had that move up to 1863 there, and then Market comes all the way down, takes out the dollars under here, the liquidity under here, only to move up again with a little running flat here, right? And then we're up. And that was that news event again there. That was the news event on gold. Here you got more expansion legs going on here, etc. You see it. You'll start to see it over and over again. I was going to go through all these, but I think it's going to take too long, and it's just sort of repeating myself. EU has been a good one, which we've got some trades on. So, and this is a good example. So all these lines, they're all just ELs that I've drawn, expansion lines that I've drawn. So you see here, just riding, just going up and down, taking orders. You know, if you're, you have your different technical analysis, you might be an Elliott wave trader, you might call, a 3-wave on this, which is totally fine. You might call a double top on these two, again, totally fine. You do that and you trade it, right? I just trade a different way, and it just works very well for me. So expansion leg, we've taken out all this liquidity up here. Basically, this leg here took out all this liquidity, right? All the orders here was on this. But then this is a market maker move again. So they're waiting for the breakout traders that go long, they get wrecked as it comes back. And then, let's say the Elliott wave traders that are looking for that extra leg in this, as in we have the 3 here, they're looking for that 3 in the last for the WXY. They might have gone to here, taken a short here, comes down, and then they get taken out, right? It's all about sort of market maker moves, taking out retail traders, right? So as someone that trades the three-phase market setup, this is what I can avoid. Of course, you can't always avoid it, but you couple it on the smaller time frame with your small time frame entries on your smaller ELs, like this one here. This is a very low time frame expansion line that I've got here. See if we can find it. Here it is. And so you see that on the smaller time frame you have the same thing, right? This is what I'm referring to. So we have the contraction phase, and then we got this big expansion phase, and then we retest, perfect little retest before the sell-off. Right, so that's what we're looking for, all time frames. But what you want to do is you want to line up your higher time frame, and then you take your lower time frame entries on those three-phase market setups. What you'll often get, and this is a good example, is why I've taken you to EU, is that you see this sort of beautiful expansion phase here, and the retest, come down, retest, and then it just holds and it keeps going. So that's an old EL, right? And that was a smaller time frame one. I get rid of that. But that's an old expansion line there. And what you'll often get is when the market is trending, it will retest that old expansion line. So that's what you have there, right? And that's that retest. Now, this was the first big news. End of last week, I believe it was. Not the week just gone, but the end of the last week, yeah. And so we had all this expansion leg, we had the retest, and then it sold off. And then when you go down to the smaller time frame, we had this expansion phase here, a retest and a sell. But I was expecting, and I wrote this on the Discord, and I can show you in a sec, but I said, if we're getting the big sell-off, right, if we're going to get the big sell-off, then I was expecting price to do this and get up to these levels to threaten this and then sell off. But I said, and then once once it didn't do that, once it just kept sort of messing around here and trending down, I said very unlikely that we are going to sell off tonight, and I expect that we will have to trend up massively. If it did sell off, we would have to trend up correctively in a huge way, but I just wasn't expecting to sell off, so I wasn't looking for any sells because of the way, and that was across all majors, right? So you take different trades on different majors because some move more than others, right? Some are stronger than others at different times in the market. So that's why I like to trade EU, AU, NU, GU, and UCAD. UJ from time to time, but it's so erratic lately, it's just been a bit of a pain, to be honest. So you expect, you take the different trades because you don't know which one's going to move more than the other, right? You can have a guess, but you can take your setups, but you really don't know which one's going to trend higher than the other. So, again, here you get that liquidity grab. Like, look at this. That was on the first news. Got the liquidity grab, sold off big, a nice deep retrace, probably to the 618, the golden zone there, and then it just shot up on the second set of news, which was a couple of hours later. And again, that was during New York, so I was sleeping, but I just didn't expect it to be trending down, and it did not. It did not trend down. It shot up. So that was 6th of Jan. I'll have a look at that. There's that thing that I put in. So gold moved up as expected, took that double top. And you trade 110 pips. So the NU trade got 110 pips. There's a couple of buys down there at the bottom on NU. So this is the DXY short that played from 104.700 that I spoke about earlier. Came back up and then sold off, right? Shorted gold here, 1864. Shorted gold, that ended up playing, what did that play for? Here we go, 1864. Short on gold played down to 1826. So that was a huge short on gold, and that came after that double top setup that I showed. Got a couple other guys in here. Like I said, I am setting up the new Discord. But yeah, just other TA on different things. I'm posting things all the time. You're always going to get trades. There's that, looking for that higher leg on the S&P. So here's that. Once DXY shorted from 104.700, we came down and we retested that EL, and we held that EL at 104, right? So we broke through it a little bit, but we came and retested it, and we just held that. I'm going to show you on the bigger screen in case you couldn't see that. Here we go. So that was there, right? So we came down, up, held, up, three wave, held it, and then we shot up, right? So here it is. If the big seller is coming at New York, these majors will trend up through Asia and London to get within range of the highs before the dump last night. Then on news, potential big wick up for liquidity grab before the dump. However, if NFP numbers are good for US dollar, algos will be set to sell, buy on release, and you can get straight 60 pip drop, etc. Right? Because the news can play out any different way. I have an excellent trading week for the first of the year, and it's not a good idea to lose big on news event at the end of the week. So trade smart, trade small, and look for the sell setups. If it's not there, don't go chasing it. So I'll continue down, but here's just another back on oil. There's that long setup that I was talking about. There's me posting about the gold setup playing from 1964, shooting down. So here's me longing EU, right? So long on EU on that wick. So we didn't know what was going to happen, but this is around that news time, right? Here's just another EL setup. So you see the expansion leg there, the S&P. Here's an entry. There's an entry on EU there, right at the bottom. This is just the sort of the entries you can get if you use this 3-phase market setup. All right, here's what I said. I said I'm so not staying up for news. Majors didn't climb, so less likely to sell off in my opinion. I'd be surprised if they did. Not from a technical standpoint, but from a market maker's perspective, right? Which is what I've spoken about how the market makers trade. It would seem too easy for those already in short positions. If they trend down, I'd expect a big corrective structure up next week. I'll take profit on some positions. I'll leave a few small open with also some limit orders if we get the wicks. So it's just saying trade small, trade smart. I'm not expecting the sell-off anymore because majors didn't trend up through Asia and London. I had that long on EU, and then you wake up and then what are we up? We're up 130 pips. So boom, 130 pips, right? So, and then here's that oil setup, etc. So I'm just showing you all this sort of stuff. This is what you're sort of going to get if you come into the Discord. You're going to get trade setups on the regular. You're going to get small time frame setups on many different pairs, and then also your swing setups. This is my big swing setup for DXY. Currently, it moved down a little bit further, but we are looking for the small time frame entry. All right, we got the double bottom, taking the liquidity, and then that extra leg to take out those traders, which is what is expected. It has gone a little bit lower than I expected. I probably expected around 1026. But again, if this trade setup is not there, then you don't take it, right? So looking for longs early this week though. Certainly looking for this to maybe take one more low and then go up. But it can also just go straight up from this level. Look, I might just catch up to the latest. This is my new Discord. It's Forex Killers. I posted a bunch in here, so you see what I'm just posting things constantly. We've got a few channels. I'm just setting it up, so it's pretty new. Come and join the party. And here's an EN trade, for instance. So I said we got an EN swing. You see the liquidity grab here, down at this level, and then I said entry looks good, and then you see that it ran 110 pips, right? So again, that's what I'll just show you on this because bit bigger screen. But there it was. So this is our entry here to go up, and yeah, we ran up 110 pips. So it is a swing trade on the 4 hour. I'm looking for a good 700 pips, but again, you take a 100 pip profit. You always take a 100 pip profit, and that's why you have multiple positions, so you can take your 100 pips and be laughing. Yeah, look, I I'm new to this. I've only done lives with people and just talking to people on the Discord. Happy to do a bunch of that. I'm sorry about this video maybe being a bit discombobulated, a bit average. It's not my forte. I'm certainly new to this. I will get better. But if you need to have help with market maker moves and not getting stopped out before the trade going your way, I can certainly help you with that. If you're a fundamental trader and you know market direction, but maybe you just need a bit of help on your snipering your entries on the lower time frame, I can certainly help you with that. If you're new to trading completely, then again you've come to the right place. You're not going to get better than someone that's learnt more than me on how the market makers can take you out. So I've learnt pretty much all their tricks and trades, and I can certainly help you not lose money like most people have had to go through. So yeah, come join the Discord. If obviously I'll build it up, and the more people, the more encouraged I'll be to put out content. But again, it's like $49 a month, and you could get that on Monday when I put up a trade entry, and it runs 100 or 50 pips, right? So totally, depends on what you trade, right? I'm just putting out trades for pips. No financial advice. I'm just putting out trades for pips. That's all I do. I'm a pip collector. I'm not worried about dollars. I'm just a pip collector, if you know what I mean. But I am expecting a big correction on the majors and gold, etc. So a lot of dollars under here, right? So there's a lot of dollars. So it's going to come back here at one point or another. We just got to time it and try and catch that, and we'll do it smartly and trade it correctly, and that's what I'll be able to help you with. Risk management, and just how to get into trades safely and how to get out of them in the right manner. Just AU here, you just see my old charts, just a bunch of ELs that just taking trades. You see sort of here, boom, 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 right, and then we come and retest that old EL and we go up. Right, same deal. So yeah, I think that's enough on the TA and all that. Again, new to this, look, if you can share this video, I'd really appreciate it. If you can like it, I'd really appreciate it. If you can put a comment, I'd really appreciate it. I'm going to see how I go with these, looking to make more content and looking just to help people on their journey of trading. Can be a bit lonely, it can be a bit hard with your family that doesn't understand. So if that's you, come and join a community. Again, I'm just starting this community up. I've been a part of a great community. I've learned a lot. Thanks if you're here at the end of the video listening to this, but I've been a part of a great community. I've learned a lot, and I just want to share that and share my knowledge and help people and not let them, or help them sort of mitigate against the suffering that sort of I and a lot of other seasoned veteran traders have gone through, and just get to a point where you're profitable and you're not stressed and you're just enjoying trading, and it's a supplementary income. So that's what you need. And again, it doesn't matter if you're an experienced trader or not. If you're I've helped a lot of experienced traders with snipering entries. I'm not trying to toot my own horn, but again, if you're in Discord, you'll soon learn that I can snipe entries to the pit. Not always, of course, but we do get those entries because of the market maker, trading alongside market makers strategy that I have. So if you're, experienced trader, but you want those better entries, then come along and I can certainly help you out. Fundamental trader, come along, can help you out. And again, new trader or just in the middle intermediate trader, certainly a lot you could learn. And yeah, come along, come join and help me build this up.